Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Today is Wednesday. It's March 9th, and we're going to be opening up in about an hour and 24 minutes. And as you can see here, the Dow's up almost half a handle. I mean, geez Louise, look at this. 500 points. The NASDAQ is up. This is anything beyond random, and this is beneficial news that U.S. is going to provide a $13 billion package of aid to Ukraine. Let's talk about all the intricacies of today's trading session. We've got the CPI, Consumer Price Index. That's going to give us a good understanding of inflationary pressure and how it's hitting us on the consumer's level, not on a producer's level. That's the PPI report. We don't have that this week. Then we have the jobless claims. The truth of the matter is, while I could talk about these reports for the next 20 minutes, the market is being not completely, but 95% roiled by this war. The war is what's moving this market right now, but it is very important to get this data because ultimately the data is going to catch up with us. The war is not going to last forever, but this data is going to be here. And tomorrow we've got consumer sentiment, which will reflect on retail sales. Very, very important report. Now, the bond market has not been reacting negatively to this war for the last 1, 2, 3, 4, 5 sessions. Matter of fact, whether the market's been going up or down, the bond market has been going lower, which means investors are not seeking flight to quality, which means they're more confident that this war is going to end on a good note than on a bad note sooner than later. The market's being driven more by inflation right now, which is usually not the key during war. So that's telling me that there's a good chance we're going to break down from these levels further once this war resolves, because I think the only thing holding the bond market up, it can't even go up at these levels, is the fact that there's going to be war. Otherwise, we're going to look to short bonds. I'd love to see price go above 140 because I'd love to sell it again, but I'm only going to follow the trend, and the main trend is lower. But again, I don't want to get stuck at these levels and see it go up to the upper end of this range. I'd rather just short it right here. So, but again, even with the market down 300, 400, 500 points, the bonds have been lower, which means investors are not seeking safety via yield. And even though yield is going to be going higher, volatility started moving lower yesterday. Very, very, very important sign. If we can see if we could see VIX break below 30, it would be a very positive sign. Put the call ratio is still elevated, steer near that one level. We've been all over the upper end of the range. I drew a little box here. There we go. Let me just do that for you here. Yeah, so you can see we're still in this range, which means we're still oversold, way, way, way oversold, and the market needs to come up in order for us to go upside. So I am not as defensive as I am speculative right now as I was last few weeks. Again, put the call ratio is telling us we need to go higher. Volatility is telling us we're overdone. The stock market is looking for any excuse to rally, and the bond market is not, most importantly, the bond market has not, and I repeat, has not been going higher with the market going lower. And that's really, 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 really important right now. That's a huge, huge sign. Now, let's talk a little bit about the broad market, and I'll give you, remember, today is Thursday, and on Thursday, I give you red meat. I give you a long trade and a short trade. European stocks, Wall Street futures rebounded Wednesday as investors watch diplomatic efforts to end Russian attack on Ukraine. Don't hold your breath. While Asian markets sank after Chinese inflation accelerated. And remember, China is the biggest exporter and the second world economy. So this is huge, and this is going to keep biting us in the butt even after this war is over. Already higher oil prices raised even higher, $1 a barrel, then gave up those gains following President Joe Biden's ban on import of Russian crude. Keep in mind, Russia exports about 6%, 6%, somewhere in that ballpark, maybe 8%. So it's not like 40 or 50%, and we can find a replacement for that. Crude oil, the basis for international oil prices, is now over my target of $120 a barrel. It's at 124, and I know some analysts at Wealth Press and some gurus think we're going to go up to $150 a barrel, which is very possible if we can continue seeing this trading type of action and this shortages in the oil market and war. Commodity markets have been roiled because Russia is the number two exporter and number 3 supplier of nickel. I've been telling you to watch those basic materials and commodities for months now, which is used in electric car batteries, stainless steel, other products. Russia, Ukraine are also amongst the biggest global sellers of wheat. Nickel prices doubled Tuesday $100,000 per metric ton. They prompted the London Exchange to suspend trading. On Tuesday, Biden announced that the U.S. would block import of Russian crude to punish Putin for attacking Ukraine. Good move. Finally, Congress would have done it anyway. Biden said he acted in consultation with European allies, but acknowledged they are more dependent on Russia and might not be able to make similar moves immediately. But that's a big, big, big blow for Putin, Mr. Putin. Oh, that Putin, man. It would be great if somebody would just drop a bomb on him, wouldn't it? I'm just saying. Energy, utility prices are higher, which is causing utilities to go higher. We are in defensive territory right now. Energy, utilities, consumer staples, real estate. We are as defensive can get right now. Technology, consumer discretionary are on the downside. We've got to be very, very carefully when we trade those. We got to only look for pullbacks. Whenever something's on the bottom, we don't want to go with the trend because the trend is not our friend. Energies have been up here since, let me just show you. Let me go 1 month back. Energy, consumer staples. Let me go back another month. So let me go, so almost about a month and a half. Energy, utilities, consumer staples. So top stock. I like medical stocks right now, healthcare stocks. And Bristol Myers has been doing well. It sold off yesterday. It's already higher this morning. I think we're going to rally back up and continue making new highs. It's a good time to look for it right now to get in. And if it breaks this area, the 66 area, feel free to get out. If you're looking at options on Bristol Myers, the option you'd want to go with right now would be, it has 100 days left, the June 17th call, and I would go to the 67.50 strike. It's not even that expensive. It's only $3.50. Very nice. You can go to the 70, but I like the 67.50. And it's got plenty of open interest and liquidity. The spreads are pennies. So I like it quite a bit, and take advantage. The implied volatility is not all that much higher. I mean, it's not like double or anything. So the option is not all that expensive, and you're getting a good price. 67.50 or 70, Bristol Myers. I think it'll go higher. And to the downside, I've got two stocks for you today. Fastenal Company, Fast. I think it's going as high up as it's going to go. I don't even know if there's option liquidity in these, but we will check in a minute. Let's see here. Yeah, there's plenty. You can go to the 52.50 strike price. Look at that. Pretty good, right? 52.50 strike, only $2, $2.50. And again, implied volatility, not all that crazy. Only 7% higher than historic volatility. So Fastenal is good. And if you're looking at Fastenal, you would want to, you would want to sell right around the current level. And if it breaks to this 57, you'd get out and hold it all the way down to the 48 level. I like it there. And I like Etsy. Etsy looks like it's already heading down. But I still think it's not too late. I think it's going to hit 108. And the option, the put option on Etsy is, it would be, let's see here, 135. You can go 135 to buy, and you can offset it with the 120. Yeah, 135 buy, 120 sell. It's not bad. So again, to the short side, Etsy and Fastenal. To the long side, Bristol Myers. Now, before I let you go, I've got something really important for you. Even if investors could figure out today's insanely volatile markets, there are still many disadvantages to deal with. It is absolutely no secret that Main Street traders are fighting. They're fighting an uphill battle against Wall Street's automated trading machines. It's like swimming against the current. You ain't gonna get very far. These supercomputers, these mega computers, can execute thousands of trades literally in a matter of seconds, triggering massive stock runs before investors even have a time to blink. That's right. Now, everyone has the opportunity to make the same lightning fast profits as the pros on Wall Street thanks to a trading algorithm that I've discovered years ago. I went live yesterday, Tuesday, to reveal my new super stocks trading strategy, but don't worry. If you missed it, we've got a recording for you. I've got you guys covered. Follow the link below. Watch this training session. You guys will love it. Absolutely love it. Don't miss out. And tomorrow, top ETF and top option pick. I want you there to get all the goodies. Bye, guys. Have a great day. Follow the link below. Check out this training session. Send me some emails. Support@marketgeeks.com. Bye.